So we're going to do two things here in this video. We're going to look at this article from Investor Place that just came out over the last day that says a big player just sold a boatload of ape stock. Should you? And as you guys are probably aware of, sellers selling ape stock actually means positive things for AMC in regard to the court case that is about to unfold. That essentially means there's less conviction in this arbitrage trade. If this arbitrage trade falls apart, you would see the MOAS. Like that's almost certainly the outcome of that. I'm not a financial advisor, I'm not a financial planner. It's not the most likely outcome that the conversion falls apart. It's a possibility. It's not the most likely outcome. Again, I'm not a financial advisor. Second thing we're going to do here in this video is we are going to try to quantify where the short interest truly is with AMC stock, including the synthetic shorts, aka the market makers shorting AMC stock, because something interesting happens when market makers short stock. Two things on this. One, it's not captured in the short interest. So the short interest of a stock could be 0, but it really could have a short interest of 100%. Because of market makers and institutional investors and hedge funds buying deep in the money put options. That's why I call it synthetic. You could have a 0% short interest that's reported to you, but really there could be 100% short interest. Sounds pretty synthetic to me. The second thing that happens when market makers short stock is it's indiscriminate. And what I mean by that is a hedge fund or institution. If they short stock, they can decide to hold when their short position goes against them. They can decide to take profits when they make money, when they're right on the trade. Well, market makers, they're there to make a market. That's their literal job. It's in the name of a market maker. Well, when they do that, when hedge funds in this instance are buying deep in the money puts, market makers have to go out and short stock. With a gamma squeeze, when institutional investors go out and buy calls and the stock goes higher, market makers have to go out and buy stock, kind of like a reverse gamma squeeze. Well, the indiscriminate part is there's no emotion, there's no kind of human aspect of it. If the stock goes higher and there's a lot of shares that are short, market makers buy back those shares. That's it. That's the bottom line. It's based off of break evens in the option market. It's not based off of whether a hedge fund or institution thinks the stock's going to 0 or not. So you can get very aggressive moves based off this, like with a gamma squeeze. They can be very aggressive. Well, same thing with a reverse gamma squeeze, which we've seen recently, the stock just falling pretty precipitously into that subsequent upside move. So let's get into all of this information here in this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Alright guys, so first things first, let's try to quantify the short interest in AMC stock. And the way that I do this is I don't look at out the money puts. So out the money puts would be like a $4 put, a $3 put, a $2 put, a $1 put, a 50-cent put. You don't look at those because market makers don't actively have shorts on those strikes because they're out the money and factoring in the cost for those options, the break even, they're just not shorting those options yet. If AMC were to keep falling, obviously they would. But I look at this point, the $5 puts, because AMC is at $4.55. Most of these break evens are around $4.70. I look at the rest of the strikes down. So between the $5 and $17 strikes, because those are strikes that market makers actively have short positions on AMC for. So if we go ahead and try to add up the open interest here, pull up the handy calculator, you got 12,000 plus 9,000, and we're really only going to look at the big expiration, the big open interest numbers. You got 12,000 at the $17 strike. You got 9,000 at the $15 strike. You got 10,500 at the $13 strike. we'll just call it 3,000 at the $12 strike, 65,000 at the $10 strike. That's been a big one. 3,000 at the $9 strike. Another 3,500 at the $8 strike. Another 3,000. See, I already messed up at the $13 strike, but let's go ahead and continue on. 75,500 plus 65,000 for the $10 strike equals 140,000. We're going to go ahead and add 6,500 for the $9 strike and the $8 strike. That leads you to 147,000. And if we go ahead and add another 109,000 for the $6 expiration or $6 strike, and you add another 117,000 for the $5 strike, you're at 373,000 plus another 3,000 for the strike that we missed at $7. You're at 376,000 contracts. Okay, so we're going to go ahead and pull up the calculator again and open another calculator tab. Keep that one down to the side. Then we're going to go ahead and take a look at the July 21st expiration. Now, we're going to go ahead and add up these options as well. We're going to do 293,000 for the $10 strike. We're going to do some mental math here to really add these further down strikes. 4,000, 1,500, 1,800. Call it about 7,000 right there. Another 6,000. Call that, what, 12,000. About 13,000. We're going to kind of round down. Call it 13,000. Plus another 4,000. Plus 65,000. You're at 375,000. So if you plus 375,000 plus 376,000, which these are very close, which is kind of strange, that's 751,000 puts that are hedged for by market makers. Now you times this by 100, because each of these options represents 100 shares. You are at 75.1 million shares likely short by market makers as we currently speak. So what you're going to want to do with this number, go ahead and come back to Ortex, take a look at the live short interest, and add the live short interest to this number. And you're going to add 112 million. Because that's where they say the legal amount of shares is currently sold short. That's 187 million shares currently sold short. If we go to this other calculator tab, we go ahead and divide 187.1 million divided by, I believe the float's 530 million right now. You're at a 35% short interest. That's even after the short interest apparently dropped. If you were to do this calculation off of where the short interest was at about 27%, short interest would be closer to about 40%. We would go ahead and see here. Yeah, you'd be closer to about 40%. Because you'd be adding about 38 million shares to that. let's go ahead and see times 100, about 75 million plus 138 million. Oh, dang it. So yeah, you would be at 213 million shares that were sold short. So the short interest is likely still around 35%, even though Ortex is going to sit here and tell you the short interest is 21.67%. Not their fault. Market makers don't report short interest. But that's the kind of short interest that we're looking at right now. And thing that makes me very bullish as well, the days to cover is at 7.31. Very positive. This is leading the short score in AMC stock to go to 92, increasing quite dramatically. Now, let's go ahead and look at what this article says from Investor Place. It says a big player just sold a boatload of Ape stock. Should you? Antara Capital is selling millions of AMC preferred equity units. In a similar move, Ray Dalio's Bridgewater Associates sold its entire stake in AMC Entertainment stock. This stake from Bridgewater Associates was like less than $1 million. So it was very small. They weren't like super long in AMC to begin with. They were kind of dabbling. They were sticking their toes in the pool to see if it was, what the temperature was, essentially, is what they were doing. Now, suffice it to say, Dalio knows a thing or two about financial markets. Does he know something about AMC Entertainment that the bulls aren't seeing? It's a question worth considering, and besides, there's another firm that's backing away from its long position in the movie theater chain. This kind of shows how blissfully ignorant people are to AMC, especially this author from Investor Place. Because while they sit here and try to say that Antara Capital selling Ape is a negative thing for AMC common stock, quite the opposite. Antara Capital selling Ape shows a lack of conviction in this arbitrage trade that is supposedly going to send AMC down, like some people think 80%. Antara Capital, the more they sell, the more bullish you should get. And just bottom line means the less conviction they have in their trade with this arbitrage trade. Now, this article goes on to say that he's referring to Antara Capital, which has reportedly sold millions of Ape stock units on multiple occasions. And they frame this like it's a negative thing, which it's almost laughable. It's literally laughable because they just don't know a damn thing about what's going on here. But they want to make these articles so you click on them, you get fearful, and subscribe to Investor Place. Antara Capital's share sales are somewhat complicated to keep track of, so I recommend starting with Investor Place, assistant news writer Eddie Pan's first report, and then follow up with his more recent articles on this. Give me a break. If this is not just one big fear promotion, I don't know what else is. It says, Pan observed that Antara Capital held 227.32 million Ape units as of February 15th, but that figure dwindled to 146.2 million units after a series of sales. This by itself might not be a reason to divest your own Ape and AMC shares, but it's certainly a cause for concern. That's true. Antara Capital has sold tens of millions of shares of Ape as of recently. This is a positive thing for the trade here, right? Ape getting sold is bullish for AMC. That's just a fact. It's bullish for this trade. And if you look at the numbers here, 227.3 million is what they owned. It's at 146.2 million now. And it's even less than that as of the latest report. So how does this kind of come together, and what should you know about this? Well, number one, we got some big catalysts on the near-term horizon. We have the Ape conversion. We have the settlement news. Who knows when that news is going to come out? Hopefully, it's going to come out relatively soon. And I think there's going to be some kind of change to this, which is likely to be pretty bullish. A lot of people expect this to be pretty bullish for AMC, including The Street, in which we went over an article in the last video. Go ahead and check that out. But really, I mean, where things currently stand, you have GME earnings next week. That's going to be a very big catalyst for AMC and for GME, for this whole sector. You got the conversion, like we just talked about, and that's probably going to be pretty bullish at this point. And you have a massive short interest pool of like 35,000 or 35% of the float that is currently sold short. So when I look at AMC and what's happened now, I want to be long in this name. That's pretty easy to see. If there was ever a time to be bullish, it's now, in my personal opinion. So that's going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.